Positional trading is a popular way to invest in the stock market. It's all about spotting trends that last for several weeks or even months. Unlike day traders who make quick buys and sells, positional traders are in it for the long haul. They're like surfers riding a big wave looking for profits as the market moves in their favor. Think of it like planting a seed and watching it grow. You're not looking for instant results, but rather steady growth over time. Positional trading requires patience and a keen eye for market trends. It's not a get-rich-quick scheme, but a strategic approach to investing. Now let's talk about why focusing on weekly charts is a game-changer for positional traders. Imagine trying to make sense of the market's every move, every minute. It's overwhelming. Weekly charts cut through the noise and show you the bigger picture. By analyzing weekly data, you can identify key support and resistance levels, spot emerging trends, and make more informed trading decisions. Plus, it frees up your time. You don't need to be glued to your screen all day, every day. Check the charts once a week, make your moves, and let the market do its thing. There are tons of strategies out there, but let's keep it simple. One classic approach is using moving averages. These lines on your chart help smooth out price fluctuations and reveal the underlying trend. A simple strategy is to buy when the price crosses above a moving average, signaling potential upward momentum. Another powerful tool is the Relative Strength Index, or RSI. It tells you if a stock is overbought or oversold. High RSI values might indicate a good time to sell, while low values could signal a buying opportunity. Remember, it's all about combining these tools with your own analysis to find those winning trades. Now let's talk about protecting your hard-earned money. Risk management is crucial in any form of trading. One simple rule is to never risk more than you can afford to lose. Determine your risk appetite before entering any trade. Always use stop-loss orders. These are your safety nets. They automatically sell your stock if it drops to a certain price, limiting your potential losses. Remember, trading involves risk, but with careful planning and risk management, you can increase your chances of success in the market.